Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. So let's take a look again on the Forex markets. You can see that yesterday it was really significant action, not only on the Forex market, but mostly on the stocks and on the interest rates. So it probably should bring some fruits today and begin next week, because market seems currently reassessing the overall balance between the different markets and rebalancing of the portfolios. Those of you who are tracking and keep an eye on stock markets, for example, you probably know that currently we are standing in a period of the earnings reports. And these reports really have brought significant shifts. So, for instance, the banking sector, although the results for the past quarter was positive, the forecasts for the next results looks mixed, and you can see it's really coming some new period in stock market behavior, as investors right now have to be more selective. If previously you could just buy blue chips and sit on the hands, currently this strategy doesn't work anymore. For example, if you could see, the Goldman Sachs equities have dropped for just a couple of sessions for 15%. So it's really, well, this is the sign. So this is the sign that it might be the early sign of the possible deep retracement or even something bigger on the stock market. In general, if you could see on the S&P index, we have the double top. It's breaking out these lows, forming a reversal swing and breaking the long-term trend line. So on the weekly chart, you could see this trend line stands since April of 2020. So now it is breaking on. So this is important shift. And of course, it makes impact on other markets. For instance, if we take a look at the interest rates, demand for United States treasuries have increased. The interest rates showing the downward retracement, which is theoretically potentially positive, because it makes dollar feels a bit weaker to euro. But at the same time, we have to understand the background, the reasons why this is happening. This is actually not because of some losing interest to dollar or something, but this is vice versa. This is additional demand for dollar just to invest in the treasuries, and some maybe rebalancing of the portfolio. So this could make sense. Besides, if you'll take a look at this is nominal yields, guys, nominal interest rates, but if you'll take a look at the real interest rates, you could see the reasons why everything is dropping. It's just because real interest rates are rising. So the real interest rates are rising. It's always the holding factor, the headwind for risky assets, because it makes the dollar and the fixed interest assets such as bonds becomes a rival to stocks and other risky assets. So that leads to some chaotic action and lots of volatility in other markets as well. So speaking on the euro currency, currently we have few not very pleasant moments. So first of all, as we suggested, the market should drop a bit lower, and indeed market has done this yesterday. But what we do not like is on daily chart, market has formed bearish reversal candle. So market created a new top and closed below the lows of the previous session, which always, at least in the most cases, it leads to some downside continuation. This continuation might be small, but usually this type of action, as a rule, has the momentum, which usually leads to some minor or not minor downward continuation. So this definitely, the pattern could be put on the credit for bears. So this is the point in favor of the bears. So trend has turned bearish as well on the daily chart. Besides, the recent sell-off on the daily chart was strong. The reaction and pullback here was very small, and market now is going lower a bit. On the 4-hour time frame chart, in fact, we stand at the last area where bulls could feel more or less comfortable. This is last bullish outpost, as I call it. just because this is the long-term trend line, the flag consolidation, and the major 618 support. The downward breakout of all this stuff supposedly will lead to the further downward continuation of the major trend, taking out of this loss, because in fact, guys, that's consolidation as a retracement after this drop. And currently at this moment, it will be decided whether we will get a bit more of this consolidation with a high upward action, or market decides that this is enough and we should keep going lower. That's actually what stands on the table, and it's a really big decision. So on the hourly chart, as we said recently, we intend to keep an eye on the patterns, right? So once market hits the XOP, which is actually mostly done, 127 extension of this butterfly is completed, and we have 1618 extension around 1280. Theoretically, it might be some wash and rinse around the major support area, right? So I wouldn't call the reaching of the 1280 as a breakout. So I would say that the breakout happens if market will drop below the 1280. Well, currently we see the minor divergences forming. But as I said, I do not like the reversal bar. And in general, if we take a look at the fall time frame chart, here is not very visible. Here it looks more. So you can see this downward action looks relatively strong. So it's rather fast. And in such circumstances, the one pattern that I would consider, or at least keep in mind, this could be formed not the butterfly, but 3-drive pattern. So potentially it might be the first drive, second, after some pullback, market could keep going to complete the 1280. So what the typical behavior of the trader in the current situation, how you could trade this setup? Whatever position you would like to take, I mean long position, you anyway have to place the stop below the 1280 area. Your option actually stands relatively simple. So either you're trying to take position right now and accept the risk that market still could keep going low to complete the 1280, because you suggest, for example, that this butterfly will be enough and market will start rising, or market was formed here, the reverse head and shoulders pattern, right? It's also possible 127 head and shoulders also sometimes are forming here. This is the one approach. Another approach is you're just conservative trader, you do not want to take the risk, and you wait for some more clarity. I mean, you are waiting for either completion of this 1280 3-drive, and then you make the decision on position taking, because in this case you will be able to place very tight stop, so you just could hide stop slightly below it area. Or you're waiting for something else. For example, butterfly is completed, you're watching for head and shoulders, for example. If it will be formed, you're trying to take the position at the right arm bottom with placing stops below the heads. So this is actually the one option that you have. And if you in general want to take the position, and although the market shows some signs of weakness, the major rule, the rule of thumb, is that you need to use the moment, choose the moments that provides you the opportunity to place nearest standing stop. So when your risk will be minimum. Or maybe the context is not very strong. Maybe you are not sure, for example, that definitely will go higher, but you see that in general it could happen. And probably you could take the position, but you want to get very small potential risk. And currently on the market, we have particularly this situation, precisely this situation. So market because stands actually around invalidation point. So this is actually the last edge for the bulls, and you stand here. You do not need to place stop somewhere below these lows or somewhere else. Actually, everything will happen right around this area. So, from that standpoint, if you in general would like to buy EUR, and you could accept the risks that we just have discussed. So this is the scenario that you could think about. And choose one of the options, as I said. Either you take in position right now, but move stop somewhere below this area. Keep stop here, because just to avoid occasional washing out if market will start forming 3-drive. Or you're sitting on the hands and waiting for additional confirmation in other patterns. So either head and shoulders here will be formed, or 3-drive will be completed. Even 3-drive will not guarantee you that market will definitely reverse up. But at least you will have the pattern and your risk will be very small. So that's generally acceptable balance that theoretically could be considered.